So this is a 2000 Shilling bill. If I want to digitize this, I'll lose almost 20% of this.
Wow.
By just moving it to my phone. Kids that grow up playing Call of Duty, playing FIFA, like being on TikTok, they're going to be the middle class and they're going to be aware of the digital economy. Being from Tanzania, I think I see a lot of problems that need technological innovation, and I think technology can really blend so well with community, but the infrastructure is still, I'd say, at 1% built in terms of even payments and also just getting people online, not even on chain, online to begin with. But what changes was not the currency, it was the utility around what you can do with it. If I can exchange it for something else or buy with something else, that's what it matters. That's what gives something a currency. So if you can do the same for tokens and say like, hey, I'm gonna just allow this token to be spent in this community, then you start creating this circular economy around that area. And this is because the economy is not designed for you to spend where you're from. It's designed for you to get out and earn money and spend it outside your community. Right. I think people should get paid when they spend. Like every time I spend my money, I should earn instead of losing.
And I think there's just going to be a certain breaking point where people are going to be looking for alternatives, more so than not just speculative crypto tokens, but actually how do we protect each other and protect ourselves and our communities so that our wealth isn't just being extracted. This episode is sponsored by NIM, the world's most private VPN that protects your internet traffic and metadata. Unlike traditional VPNs, NIM uses a decentralized mixnet to scramble your internet data, hiding who you're talking to, when, and how often. You can switch between full mixnet mode for maximum anonymity or a faster VPN mode for everyday use. Pay in crypto or fiat, and even your payment stays anonymous thanks to ZK-powered anonymous credentials. Take back control of your online life at nim.com. Sign up today using the code blockchainsocialist and get an extra month for free. Hi, everyone. You're listening to the Blockchain Socialist podcast. I'm Josh, and I'm here today with Victor Muhagachi. He is the co-founder of NEDA Labs, which is an organization that focuses on building digital asset payment infrastructure in Tanzania and Africa. And we've been in discussion for a little bit just because recently at Bread Cooperative, we've been working on a new application called Stacks, which is basically a crypto implementation of saving circles, which is a really interesting kind of financial arrangement that's very common among people in places where they may not have access to lots of more institutional forms of finance. I came into contact with NEDA Labs because they already been doing a lot of this type of work. I've already built something quite similar. And so I thought it'd be really interesting to have Victor on to kind of talk about that experience, talk about the experience of being in Tanzania, building crypto applications and payment infrastructure applications in Tanzania and in Africa, to get a little bit more of that context and to share that with all you guys. Victor, thanks for coming on. If you want to give maybe like a quick introduction to who you are, and maybe we can start off what got you into crypto.
Hey, sure. Thank you so much for having me. This is quite an honor. My name is Victor Muhagachi from Tanzania, East Africa. If you've never been to this side of the world, I welcome you. It's quite a beautiful place to be part of. Yeah, I'm a co-founder and a builder based in East Africa. I've been building in the Web3 space for, I'll say, 6 to 7 years now. I caught the crypto bug early on after, I would say, just being exposed with my friend David, who's also my co-founder. He was really heavy into contributing in different DAOs, and we started at Prime DAO and just writing research and just getting curious about technology. We really started the journey of building tech back in 2018. I've been passionate about building products. My background is in finance. I studied economics when I was in uni and like during my schooling year. And then from that, I really just was trying to be an entrepreneur. So build a music streaming platform, had a lot of learnings from there because at the time it was just the excitement of just being a founder and building startups. But then when I met David, he introduced me to crypto and his whole new infrastructure around blockchain. And from there, we founded NEDA Labs, and it's been the anchor point around all this. Being from Tanzania, I think I see a lot of problems that need technological innovation, and I think technology can really blend so well with community, but the infrastructure is still, I'd say, at 1% built in terms of even payments and also just getting people online, not even on chain, online to begin with. So we find this quite an exciting challenge to kind of be part of, and we see it as a long-term vision. And NEDA Labs, our mission is to say, hey, can we not only get people on board, but build infrastructure that lasts, but it's also adaptable and also looks ahead like, okay, we're not building something that's a silo. but something that can be interoperable, that other systems can join and people can find value in it. And I think blockchain is the closest thing to kind of achieving this. And I'm super excited to, always meet new people in the space, the community aspect of being in the Web3 space. And yeah, meeting Joshua was quite exciting, and what he's building at Stacks, I think is really, really cool. And Bread as well, bringing around tokenization from deposit, from like ownership of like trust, and how we can put that as a value, as an asset. So I'm quite excited about all these things and how they kind of tie it all together. And yeah, looking forward to this session and sharing more about what we're doing out here.
Yeah. So maybe just slightly more context. If you guys are interested in learning more about Stacks, we had a webinar a couple of weeks ago about showing off kind of Stacks and what we're trying to go with it. And unfortunately, the video was corrupted that we recorded for the webinar, so we had to re-record the presentation. But the re-recorded presentation is on YouTube. If you go to the Bread Cooperative YouTube channel, so you'll find it there. And you'll see kind of what I do is I created a showcase, or kind of like what ideally the end product would look like that we're trying to build, to kind of take you along the journey and the story for building these types of more mutual aid and solidarity finance focused applications, and where I believe that can take us in the long run. So I'm very biased, but I think you should check it out because it's interesting. But maybe to continue with this conversation, what would be, I think, important to contextualize kind of the work that you're doing and why you find value in it and why it's interesting. If you want to talk about the context, maybe in a little bit more detail, of Tanzania in relation to payments and crypto, just to kind of understand like the kind of what is the environment you're playing with.
By the way, I had a chance of checking out stats. So guys, trust me, what Joshua is telling you, something you should look forward to. I think it's quite amazing. I like the ethos around what you guys are building, which is quite interesting. Now, even in the context where I'm from, so from Tanzania, grew up, spent majority of my life in Tanzania. I would say it's a hidden gem in a place, because we speak Swahili as a national language, so you won't find anybody speaking English. So there's always that barrier to begin with. But I won't call it a barrier necessary, but I would say an opportunity, because that creates community that have one operating system, because language is the operating system of the mind. But then now, how do you build context around technology that kind of like embodies this? So even for us, what we're doing with Washikadao is kind of like creating and translating and abstracting a lot of the jargon and what is under the hood to what is the functionality of tech. So as a Tanzanian growing up here, it's like, instead of changing or redefining the wheel, it's like, how do we make tech that adapts? So we have um, over I would say 30 to 40 regions around the country, divided into the eastern, west, and central. The east coast is where the Indian Ocean meets the Tanzanian coast and shoreline. And then as the further down you go, you have mainland and you have northern lands, and there's a variety of activities happening throughout the country. So you have businesses, you have people doing agriculture, people doing like, I'll say middle class businesses, people doing tourism. There's a lot of industry happening in the country, but all of them rely on the same payment infrastructure and value infrastructure of like traditional banking, in terms of how value moves, how business interact with one another. So this comes with a lot of architectural barriers, especially mobile money was a huge innovation that happened in Africa, popularized by Kenyans and started in East Africa. So Tanzania as well, we have mobile money. So you find a lot of us have had experience of having wallets by just having a phone. So the moment you have a SIM card, you already have a wallet and I can put money in it. So you can find we're quite ahead in that space. But then this comes riddled with a lot of infrastructural barriers, where a lot of fees comes with it, and a lot of it comes with the context where you have agent networks that help you top up your mobile money. So most people will have cash. That's cash is king in Africa, and I need to digitize this cash into a digital value equivalent, which will be mobile money. So I can top it up on my phone, and then use it for everyday payments. But then this creates another barrier, because now you realize I lose almost 20% to 15% just digitizing that Tanzanian shilling. Now, this is what's happening right now. If you have 10,000 Tanzanian shillings, I think it's quite funny whenever we talk about it. So this is a 2,000 shilling bill. If I want to digitize this, I'll lose almost 20% of this
Wow.
by just moving it to my phone. And I think a lot of people complain about this, but when you do research, even for me, when I started, I was like, wow, this is so unfair. But then the more you do research, it's like, there needs to be agent networks physical hubs where you can take your cash and somebody will on-ramp it for you
Mhm.
physically, put it on your mobile phone. Now, that process means there's a middleman, there's a network service, there's a company that allows this to happen. And then what that tends to happen, it rises the fee. Then you find the same process costs you more. Now, it happens when I want to take it out, same thing. When I want to send it, for example, if you're showing you in Tanzania, I want to send you money, I will lose maybe 10, 15%. They're trying to bring this cost down, but then it's still quite a burden. Now, this is the landscape at the moment. So you find the infrastructure is there, but it's not heavily utilized. It becomes a backbone because we rely on it, but it's inefficient in a sense. It takes more than it actually gives. So you find as a business, as an individual or a business owner, I'm losing a lot of money in just moving it from wallet to wallet, from buying things. So I'd rather have it in cash than actually move it. But then you realize, okay, what are the things that we're missing out on in terms of digitizing the economy? Because we're seeing the huge rise of like people buying things online, digitizing, SIM banking is becoming a huge rise. Now, technology that's meant and designed for traditional banking is really lacking behind because of the fees and the infrastructure it's built upon. So this is what's happening right now in Tanzania, I would say, and that's where we see an opportunity in, and we really want to shape this industry and be part of it. Now, our way into it is like we want to bring tokenization in deposits and use the same rails, but then allow people to have more like cheaper rails when they want to move money from peer to peer transfer, from business to business transfer, from merchants to network transfer, and or even to cross border payments. And I think that infrastructure has already been showcased that stablecoin can do this, blockchain can do this, and we want to not only do it but localize it as we do it. I wonder if it's the same where you are, but in Tanzania we are ahead, but it's quite riddled with pay with like fees.
Right. So yeah, where I was gonna ask if you could explain maybe the mobile payments a little bit. I mean, if I understand correctly, it's very similar to, or I don't know for sure if it's like the same thing or very similar to M-Pesa, which is what I understand is like the system in Kenya. But if I
Yeah,
understand,
yes,
like
this
basically, is it just like your SIM card is your wallet, and the SIM card is is the SIM, is that because you can just buy any SIM card and that's basically a wallet, or because when you buy a SIM card, you give some ID and like there's like a little bit of KYC, or you can just like find whatever SIM card and that's basically a wallet. That makes sense.
now the SIM card is your wallet, and this started like a while back. You could just get multiple SIM cards, any SIM card. But I think now all the providers, mobile network providers, they're allowed. They have stringent KYC, so you need a national ID to activate your SIM card. So everything now is tied around your national
Right.
ID. But if you're a foreigner like yourself, you just provide a passport. If you were to come to
Mhm.
Tanzania and you're not Tanzanian native, you would just provide a passport and they'll give you a temporarily SIM card that maybe after once you stay in 90 days, it will expire and then you can just renew it. Now, for me, I've had the same SIM card for years and it's just tied into my national ID. And the cool thing about it, I can even now open a bank account with just my national ID.
Mm. Like in
Like,
terms a new
yeah.
bank account, or in terms of like your mobile money is like your bank account.
There's a new companies are coming up. So this you like even last year you couldn't do this. There's a new like neo bank that started that just you just put your SIM card and they tie that to your bank account. But what they really do is tie your SIM card to your national ID because that's the unique number that you will only one time you will have it, and then create an account from that national ID.
Mm. Okay. Okay.
Essentially, we could even it's like your one source of truth for KYC, so I can always know who's the owner of this account is. And I think that's one of the biggest like push that's happening in Tanzania and East Africa in general for the past like 5 years. It's like national identification is going to be the backbone of like how everything happens, like the way social security is used in America. I don't know if Europe also has social security number, so that kind of ties your KYC, and then provisions of wallet happens with that. And now, say if you're a regulated financial service provider, you need to have KYC that ties into your national ID. It's just a way to safe practice. But M-Pesa is similar. Yeah.
Okay, so essentially in Tanzania, there's been this big push around digital payments and digitizing the payment system to some degree. However, there's some hurdles and obstacles. In particular, it sounds like the fees to digitize the money. And I guess it sounds like you can go to certain hubs you were mentioning where you can give cash and then you can digitize it. And that way you don't have to hold the cash. You basically just hold it in your wallet. And that might feel a bit safer for some people. Or, yeah, you just don't have to carry a bunch of cash and you can make payments online and across distance. Now that we understand more of the context of Tanzania, I'd love if you could maybe just give a bit of an explanation of what is NEDA Labs and what are some of the things that you guys are building in this space.
Yeah, so maybe I'll give you an introduction around the name. The name kind of came from a combination of national electronic digital assets, and our vision for it was more like create like a space where traditional finance meets the digital world. So we also look at it as as an asset because we call it national because we believe technology like this needs to be used by everybody, right? So I think as an infrastructure, we're open source in the sense of can we create equity around tech, but in a way that adds value, and especially in financial rails and payment rails, is there the way for you to get access to even on a feature phone, you can have a mobile wallet. So we can see the value of getting people financial tools is already been created. Now, what happens now is like, can we upgrade this system now to the next level? Like in any software, anything that you're building, it's like, hey, stage one is done. How do we go to stage two? But building stage two for us, the way we're thinking about it as NEDA Labs is like it needs to be something that thinks not today, but even future products that are gonna come. What kind of technology they're gonna consume? Now, blockchain kind of shows the value of interoperability. I keep saying this because today in Tanzania, most people already have a SIM card. Then the next thing is that they'll have a bank account. The next thing they need now is a mobile wallet. So, because all these are wallets, but one of them is traditional, comes with your phone. Second one is also traditional, non-institutional, like, hey, I have private banking. Most people use it for financial record keeping and say, if I want to get a loan or travel, like, I'm employed, we go to the traditional banking route. So I think you see how the traditions kind of grow together. So at NetLabs, we're thinking, okay, what's the next step after that? And I think we believe is having a digital wallet that can hold crypto assets. And when I say crypto asset, I'm not necessarily just meaning Bitcoin, Ethereum, or like DAI or any tokens. It's more like the value of what that can bring in traditional economies, right? So you see M-Pesa was essential in getting people to have wallets from just a SIM card. And then banking was essential in the sense like, hey, come and have record of your transaction and become worthy to get loans and have a credit score and have like a financial trail. Now M-Pesa is doing that as well with your M-Pesa card. And then now we feel like, okay, these two areas already works. Now what crypto allows is interoperability. Now I can be able to hold digital asset from all over the world, and they allow me to kind of like tokens around me to contribute, make decisions, vote, pull together. And I think this type of economy already happens in Africa, but it doesn't have the infrastructure to happen on. And we're trying to use Web2 and banking system to do it. And you see a lot of limitations in it, from regulations to onboarding fees to moving money for peer-to-peer transfers, like we spoke about earlier. So at NEDA Labs, we're really trying to see, can we be the pioneers in this space, predominantly issuing deposit tokenization inflows, but then on top of that, also being able to kind of be the backbone for the digital economy in sense of like creating DeFi products, creating virtual asset licensing and policing around it, but also use cases and pilots of how it works. We launched a UBI token, and I have a crazy story about that. So I think that's one of the things that to me was like, oh wow, this works. And maybe I could talk more about that and then to really showcase like how like we're thinking about this technology. But yeah, I would say NEDA Labs is just trying to be the next like financial service layer that helps people get into the digital economy, not just by being it, but participating and contributing from no matter where you're from.
Right, right. I think it's interesting. I mean, the contextualization that you gave about Tanzania and in East Africa at least, and has been kind of reported quite a lot in the news around like I guess the usefulness of stablecoins for a lot of people in these types of regions. But yeah, I guess one of the things that I know you guys have built. So I'm curious to hear about this UBI project. I actually didn't know about that, but also about like some of the like NEDA Pay. I know is like one of the big products that you guys are working on as well.
We started with data collections. I'll take you a couple years back. So we did the proof of impact, proof of personhood, like a pilot where like, hey, if you can get this much plastic and verify it, we'll buy it from you and then give you a token that you can redeem. And did this pilot, but then we realized a lot of people can get on chain. It's quite expensive for people to get on chain. So the idea was like, okay, we see the value in blockchain, but then there's a lot of these limitations. I need to go to Binance, I need to pay somebody who's holding stable coins, and they need to refund me, and I need to be able to kind of like refund them. So you find I'm losing a lot of money just buying USDT or any stable coin. Because at the time, stable coins are the easiest entry to crypto, and then you swap it to other tokens, right? So as we're building this, we saw a lot of limitations. So we're like, okay, we need to build a way for you to pay and take your Tanzanian shilling and convert it into a digital asset. So that's how NEDA Pay came. So tried out for Beche. So we had built it, but we couldn't get Rails because it's not regulated in Tanzania. So a lot of like Rails for you to come in, PSPs were like, we don't want to touch that. So we even went a step ahead and get like robotic agents to use traditional wakalas to ping that, hey, if you get your transaction ID and you send it, we've tied this ID with MetaMask that will see the equivalence and give you your tokens. So a lot of patching of things that should not be patched together just to achieve something so small. So that's how NEDA came to life. That demand of like, okay, I have my Tanzanian shilling, but I cannot tokenize it and get into the token economy. So NEDA was built to kind of become an on-off ramp rail, predominantly for stablecoins. So we're all in one stablecoin platform that allows you to convert your shilling or any currency to stablecoins and vice versa. So we're in 5 countries, still testing out. The biggest limitation is still the regulator, not really, because the regulators scare away providers to come and do it. So peer-to-peer transaction becomes the alternative. But then peer-to-peer transaction has a lot of fragmentation and liquidity. So let's say I have 1,000 Tanzanian shilling or $1,000, I want to convert it to stablecoin. I might need to find 5 or different people to kind of pull from. Like this guy might have 500, 200, 300, and then together I'll have. So that's very inefficient. But the guys who have a lot of liquidity are banks and fund managers, but they don't want to touch crypto because it's not regulated. So we build something of a payment orchestration tool that allows them to never touch crypto, but just touch the order. And then you send your equivalent, and then in the back end, we refill you with stable coins once the order is fulfilled. Now, with that kind of like structure, a lot of PSPs, a lot of banks are kind of comfortable with this. So we've been working with the central bank here, trying to be in the sandbox to show them the impact of this, and hence that's how we got into the UBI token as a way of proof. Like, hey, this technology has value. You just need to not think of it as, because when the regulators in Africa, when you tell them crypto, they think Bitcoin,
Right.
They think
Volatility.
40. They see like they just see the candles dropping every day because most of the I met this regulator one time. We're talking to central bank. One of the guys was like, "Hey, this is very speculative," and I'm like, when you get to investigate and ask them questions, they entered crypto when it was at a bull market. Everything was so high, and they bought and they dumped, and they never want to hear about it again. So you're like, "Hey, we're not telling you to buy Bitcoin." So I mean, there's a lot of maximalists in the space for Web3, but I think let's not take away from the innovation of around blockchain, especially in tokenization. I think even with the rise of AI and how people are consuming tokens without knowing, I think the agentic creation is going to bring a lot of rise in tokenization, and that is going to require a deposit to be tokenized. And I think this is where spaces of where NEDA comes in and say, hey, this is an entry for you to tokenize any asset. We start with deposits because it's quite easy and it's pegged 1 for 1. So I'm equivalent, like my deposit of 10K is equivalent to the tokens I'm receiving. And I think this is what I really like about what you're doing with Bread as well, comparing with DAI with a stable coin and then creating stacks around it. It's really abstracts what you do, and the entry point for me becomes almost traditional like e-commerce. But now I just buy points that allow me to get on this platform, same way I would do in a game, or because this is the generation that we're going to serve in a couple of years. Kids that grow up playing Call of Duty, playing like FIFA, like being on TikTok, they're gonna be the middle class and they're gonna be aware of the digital economy because they're content creators. They've seen their parents come from community saving pools, so they do understand how money moves economically. Right now, we're not at that stage yet, but I think 5-10 years we'll have those consumers. But right now, we're building the infrastructure for them. So NEDA is like, hey, you want to move money internally and across the country? We have the product for that. Now, the other products that we create kind of like tying in the space of, okay, I want to make payments, but I'm tied into one rail that is, like you say, my mobile network. But I want to get out of
Mhm.
that network and get into this economy that allows me to move. Now, this is where tokenization really thrives, right? So if we can create the entryway for that, I think we can now start creating products and utility around it.
No, I think that, I mean, it's so, yeah, the comparison with Bread Cooperative that you made is interesting. I think we're the approach that we're taking, right? We tokenize something that is already tokenized in the way that I work. It's like a wrapped stablecoin. So it's like the reason being is that we didn't want to deal with, we don't want to, I mean, we would just want to like have distance from like regulatory pressure or like any issues with like regulatory things. And versus like if we created our own stable coin, which is like in my view just a lot more, that's like a lot more work. And the reason that we went that way is just we wanted to move fast and we wanted to just like prove things quick. But what you guys have done that I think is interesting and that I'm, you know, interested to hear more about is like this, how you guys have been able to navigate the regulatory and like legal, I mean, really, I mean, to me, it's like it's a bit of a maze, you know, how to like getting around this all this legal and regulatory stuff. And I'm sure there's complications when you want to do cross-border things and just like getting like within one country to get permission to start like a, because I know what you guys have done as well is started providing a Tanzanian stablecoin. But I wonder if you can kind of like talk, what were those conversations like? What was it, that experience like trying to do that? I know you mentioned the central banker who hates Bitcoin because he lost some money. I wonder what the other ones are like.
Yeah, the conversations are always ongoing. Even right now, we're still in talks with them, always like testing parameters of like, okay, how everything works. I think the the importance of it is what matters, right? Because when you're in finance, trust is very big. Because whatever we do, especially we are saying, hey, I'm gonna give you a rail for moving money, and we don't custody user funds, but we orchestrate and kind of route it to, like, to allow them to have value in these spaces. So they need to trust us. So being regulated is a plus. It's like a huge bonus. So
Mm,
we don't shy away from that, like, most Web3 products and
yeah.
finance, because they're like, I'm against finance. And I was even talking with John about this from Solar Foundation. Well, hey, there do we need, like, custodianship to be held by banks? And I'm like, in Africa, our biggest problems is infrastructure, not really regulators, right?
Mm,
The regulators are there to even build this infrastructure because they lack builders. So if we can build and build with them, it's a huge plus. Now, you gotta understand, a mandate for a central banker in Africa is probably inflation tied into, like, employment, and also collecting yields, selling treasury bills and bonds. So the government has enough liquidity to provide for the economy. So when you tell them, like, I'm gonna revolutionize payment speed and all this, they don't really care about that. It's like, I don't care if it takes a day or 3 days. I care if it reaches there and the economy doesn't fumble.
mm,
But we come from this like, no, it could be better from technology. So what we like, the biggest finding I would say, and if anybody is listening to this and wants to connect with regulators, speak their language from pain points they care about. And this has been huge for us in the sense, like, hey, people are going to interact with crypto whether you like it or not. People are going to always find ways around finding value and trading value among each other. That's how economies work for times, for generations and years, right? So what you need to do as a central bank is, like, hey, create environments that allow them to use you as a legal, like a proof of reference, trusted layer, also a market maker that observes, right? That's do what the central bank does. And instead of you shunning and limiting this, you're missing out on tax you could get. You're missing out on liquidity that could flow in your country. So, for example, in our case in Tanzania, the bond market and treasury market is one of the highest in East Africa. Compare that with our inflation. Our currency inflate at 3.5% yearly, which is really good compared to Kenya, Uganda, Nigeria. These are the biggest economies in Africa.
mm.
We are held in really strong. So if you hold a Tanzanian treasury bill, even you yourself, you would earn up to 10%, 12% guaranteed per annum, whatever
Well,
income
yeah.
you come in. Now, if you're holding stablecoin right now, if you're holding USDC, you will never receive this type of returns.
Mhm.
Like, The most you'll get is maybe 5%, 4%, and then 7, 8 if they are mixing it with crypto and like Ethereum and Bitcoin as investments like tools. But if you purely hold treasury bills in Tanzania or like money market funds, you're guaranteed 10%. Now, this is liquidity that a lot of files or communities or products or people in the space could tap into and generate this yield. Now, when we speak to regulators, we're like, hey, we see a lot of value in increasing liquidity by people holding treasury bills, but they cannot hold it through only the traditional ways of banks and this. But can they hold it through stablecoin, like a local stablecoin that is issued by us and then verified by you, audited by the central bank? And we use traditional rails, same thing you do, but it's just a ticket, like a digital ticket. Now, this is a conversation that a central banker can understand. Like, okay, so you're telling me I'm going to have an X inflow that comes to my treasury? Like, yes. You're telling me I'll have this, this, and this? Like, yeah. How's your KYC? Standard, same one you use. How's your fund management? I'm using regulated rails. So the way we collect our funds is to regulated rails, so mobile money, banks, traditional stuff. But then we try to, since we're going to get yields, we'll cover the cost with the yield. So your onboarding fee moves from 10% to 1% or 2%. So now this is like value to the user. Now, if I say I'm going to like now give you 10% yield, that's even safer because the market is at 12, 14. So still 10 is good. It's a good buffer. So now this language is easy for the regulator to speak and understand. So I would say how you engage this is first, it's good to build trust. It's good to be recognized. It's good to be known. And secondly, it's important to speak the language that resonates with the person you're talking to. You understand the tech and how it goes and the value around it. Now, persuading or getting someone to also understand comes from the pain points they have and the value they see. So once we communicate this, we start seeing a lot of acceptance and people saying like, okay, I see where you're coming from. And it's easy to get a sandbox environment and test things. And then we do a lot of pilots as well. So all of the stuff we've been doing, I say from 2021 to now, combination, the majority of it has been pilots driven. So we did a UBI token where around this proof of personhood, we say we launch a token on Kusama. So ideally was, hey, meet up every 10 days, use kind of phone, we each get $2. Ideally, save your money, spend this $2 in your community. Now, this token, since it's a native token, you can only spend it where you accept it. So imagine if this is a 2,000 shilling Tanzanian bill. It has value in Tanzania. I can probably buy like a meal with this. But if I was in Germany, no one will accept this. It's not because it doesn't have value, but because the person accepting it will have nothing. It's like, where am I going to spend this? Just be a souvenir to them. But if this was a US dollar, you would accept it, right? You'd be like, okay, I'll probably find it somewhere I can change it to a euro or, see? But what changes was not the currency, it was the utility around what you can do with it. If I can exchange it for something else or buy with something else, that's what it matters. That's what gives something a currency. So if you can do the same for tokens and say like, hey, I'm gonna just allow this token to be spent in this community, then you start creating this circular economy around that area. So our idea was this. We see a lot of capital move from African communities. If I live in where I stay, for example, where the side of town I stay at, I don't know spend money there. All the money I make goes away from that community and goes where probably I work or where I go shop, and so that could really, if that community does not see that capital circulation, you see like capital flight in most communities in Africa. And this is because the economy is not designed for you to spend where you're from. It's designed for you to get out and earn money and spend it outside your community. Right. So you find the local shop does not do it. So, but if you create a native currency for just that area, then you start seeing people spending more in that area. But then you don't want to just influx it with just that currency. You create it almost as like a discount system, like a point system, or more like they say, if I was going to buy something for 2,000, I can buy it for 1,000 and an extra like Nyota like token for it. So it becomes like a discount system. So I accept this half, 70% in fiat, 25% in or 30% in the digital currency in that area. So for the user, it's like, hey, yeah, I've saved 20%, right? Money that I got from just being part of this community. And the shop owner is like, oh, I've given a discount, and then I'm probably going to spend this discount in my community again. Now, your job or the job of the community or our job was initially to kind of like educate people on this, but also allow them to understand the idea is not to hold your token, but to spend it and use it as a cash like
Right.
subsidy. So you end up at the end of the 10 days, at least save like $5. That's the idea. You have an extra $5 you can spend in your
Right. Right.
community. So if save that $5 and spend it in something else, either your child's school fees, or maybe a groceries, add them to your
Mm-hmm.
grocery bills. So these type of utilities can all happen with like stable coins and UBI token. Now, when you go to the regulator and you be like, hey, these are the use cases we're finding. This is how we can trap more capital in communities. And as NEDA Labs, what we're really trying to do is say financial tools at the end of the day should not leave you depleted. They should add on to you because these banks, these MNOs that hold our money, they make stupid amount of money from our yields, from earnings that we make. They charge me on fees, they charge me on credit every time I take a loan, every time I move my money. So I'm like, okay, that's an outdated like Rockefeller 1920 banking model that really in 2026 we shouldn't abide to that to this day. I would go even further and make a controversial statement. I think people should get paid when they spend. Like every time I spend my money, I should earn instead of losing. But we live in a world where I'm losing money by giving other people money that my money they spend in investing for me
Mm.
that give them yields and then come and tell me I don't have financial literacy. It's like, no, your systems are riddled for me to never get out.
Right. Right. Right.
So that is the powerful thing that I think this technology can unlock.
Yeah, I think
Not redefine the world,
yeah,
parallelism.
and just to say, I think one of the things that I find really interesting about what you're saying is very similar to a lot of things that I've been interested in around this concept of community wealth building, of like local currencies as like basically ways to keep wealth within a community, so that you don't have capital flight where people are just kind of like buying things that are from outside of the community and then maybe brought in, or or maybe they leave the community, what have you. And this is something that and I mean, neoliberalism has kind of promoted through globalization. One of the kind of side effects of all this has been kind of capital flight from different places and concentration of capital in particular places. I think one of the things that why I can understand why this is like so interesting for people, maybe like your context and maybe in another context, is that it gives more like ability to govern and control economic and financial life in the hands of people who like just want to go and do it, which is what I find also really interesting. And what, with bread, we're not, I like to compare it to a local currency, but without like a physical locality necessarily. But yeah, I
Mhm.
definitely resonate with a lot of the things that you're saying, even though your
Yeah.
context is maybe
So
slightly different. But yeah.
now, so check this out. So, for example, right now, if I wanted to get a mortgage in Tanzania, that would take me back 16 to 18%. And I have friends who
Like the
work in
interest rate
treasuries
on the
in
loan.
banks. Yeah,
Okay.
interest rate on the loan,
Hmm.
16%,
Wow.
18%. Now, depends on the ticket size and your credit scoring. And some of these things, they're not even native to a lot of African communities. Now, if you're trying to grow an economy and your interest rates are that high, it's quite dangerous for you to see like, hey, you create a lot of like even not social gaps, but also lack of liquidity in the market. Now, how does this happen? It's quite complex because it's like this because also the treasury bills of the country, that's the ticket they go for 14%, 13%. Oof, I need to charge my laptop. Now, because this happens, you get you get this like the biggest holders of the treasuries are banks, and these banks they're required because if they're holding like treasury bills from the government at that rate and they're going to lend this is my money that I'm putting at their banks, right? And they take it and buy government bonds for them to mature at 12%. So if I go and try to borrow from them, they will give me a rate higher than what the ticket is. But then we live in an economy. If we're going to use the same standards, can we not now invite other ways for liquidity to flow in so we reduce the interest for our country? Because you meet all these bankers and you ask him, if people are borrowing at 18%, what is the default rate? They might I mean, it's probably they default a lot. That's why you're charging them. They'll be like,
Mm,
no, our default actually went down to 1%. You're like,
mm,
so why is the interest rate so high? It's like, but then you really realize most people making decisions in Africa are treating Africa as a third world country, which is, I mean, to use loose
mm,
terms, but they're even the gauge of standard how we're marking economies is benchmark. So whenever you do that, you create a mean average. When you do a mean average, there's always going to be a discrepancy. So and the reason why a lot of people are not in the economy is because the infrastructure is not built. It's not because they cannot participate. So when you use that equation, you will always find the majority of people do not qualify in your metric, but not because they don't fit your metric, because the infrastructure of even how you can measure this equation is not built for them to be included in the equation. So when you do that
mm.
equation, you didn't factor in, did I factor in this guy who's SME in Bear but does never use formal economies? He probably uses cash mostly than
Right.
anything that we've accounted for. So you're capping him at 20% less than what he actually circulates. Now, when you start using these metrics, you find it's never going to work. But then I'm not an economist for a nation, so I don't want to interfere with what they do. But I always believe we live in a time where everything you think applies in Africa does not apply. You need to rethink it differently. This is my personal opinion. We need to rethink credit scoring to credit investing. We need to rethink payments to investing. We need to think everything that we traditionally do does not work for us, because if it did in the last 30 years, it would have
Right.
matured to something that is, helping people. So when new technologies appear like blockchain, all this, we should not jump on them like without any research, but we should look at it like this. We are so behind in infrastructure, but the world is so ahead. Like, right? So we don't have to reinvent the wheel and start from scratch. You should have like, hey, what works here? How can we kind of build parallel going to find alternative routes to get here? So we don't have to start like, hey, let's go and do this. We can start slowly, but then do it like outwards, like roots, and not like the conventional like XY graph that
Right.
you
Right.
go
Right.
up, especially now when we're entering a new era where productivity is going to be so different with AI, and a lot of jobs are going to be disrupted, especially in major industries that run Africa, because Africa is run by middle economies. Now, I know I'm going a lot of points. I'll land to my point, which is the way we score people's value should not be parallel to what they create, but to what opportunities they can create so we can bring more liquidity and supercharge their growth. The same way you would treat a startup model if you're a VC. You're like, hey, I'm going to invest in 100 10x platforms. And if one of them 10x, it saves me 10% of what I've invested in. So even if I lose my money here, I'll make it back for one of them exponentially grow. So Africa should be treated like that. So you say, look at the industries, look at the value the communities have, and then flood it with liquidity, alternative from different spaces. And I think digital assets can do this. Same way what you're doing with stocks, Washkadao can be like, hey, these groups they come together and they pull this much liquidity together. Can we match their funds? Can we create alternative ways for them to kind of grow,
Yeah.
how they pull money together? And that becomes a way to kind of like anchor it. So it's like, whoa,
Yeah.
your interest rate went from 16% to 2% because you have a new collateral asset that is matched with like social equity rather than collateral from your house or
Right.
something different.
Thanks for sharing your perspective. It's like very very interesting to hear it and hear it in like very financial terms, which I think is interesting. But one of the things that maybe going from maybe this more institutional or like kind of high level financial way of looking at things, and because what is interesting about what you guys are doing is that you're also working on a lot of like community oriented things, really on the ground stuff. There are two projects specifically I want to kind of get you to talk about before we run out of time. One is Washikadao, which is one project that I believe like maybe you guys started quite a few years ago. You've mentioned a couple of times, and maybe just to share what exactly it is. And then the other project is one that you're doing with Solar Foundation with JUKUMU, which is the actual Saving Circle project. So maybe we can get those two out.
Yeah, is something that I think even the name itself came to us because it just tied in so well. So we've been working with community saving groups. They're not new, and especially in Africa, a lot of the backbone of economies is run by saving groups. My mom's been part of saving groups since I was young. Whenever I told her like, hey, I'm interested in doing stuff like this, she always gives me this book that of part of the groups they're in. It's like almost they have like 1,000 people in it, and they have like yearly reports. And she's like, hey, you should check this out. Look at that, because they never had like a platform or tech, so they use banks to move things around. So I was like, wow, I think this needs to be digitized for the longest time. And then I came up concept of DAOs. This is like 2021. And people are like, hey, decentralized autonomous organizations and how they work, people can vote. I'm like, okay, there's some heavy, strong principles that DAOs work on, especially with blockchain, voting and stuff like this. So you find groups already do this. Now, when we did the UBI token, we did it with JUKUMU. JUKUMU is a network of small entrepreneurs around Africa, especially in Tanzania. What they do, they come together, register, and work operate as groups. And then people with the same interests are grouped in this one together, and they do activities together. They pool together and save money, and then they lend among each other because the interest rate is low compared to traditional banking, like we spoke about earlier. So what we try to do with Shikadao is create a protocol, a DeFi protocol, that can allow all these decisions to be done on chain. And when we started this, we have faced the same problems where you can't buy tokens. Still to this day, it's really hard to buy any digital tokens with fiat. So that's why we built our stablecoin. Now, one of the huge development that happened this year and the end of last year was now we can integrate wallet as a service around these protocols that we build. So Weshkadao is a place for you as a member of any group. You can come and join the platform, create an account, and we'll give you a wallet inside it where you can fund it and move money for free inside it. And then your group you can invite your group as well. They can create a portal, and then they can have a wallet, and then you can come in together, make decisions by proposing. The idea behind it is this: come as yourself, join a network of community people that are aligned and doing something together, and make decisions in how your money moves. And then you can do this by contributing to, like, buying shares or putting a pool together, and then you can disperse that pool among each other with mechanisms that you want and decisions making that you want. And the governance happen because you can now use your wallet attestation as a proof, like, hey, I'm part of this group, I've contributed, and the money can be dispersed among ourselves. This is not something new, but what's innovating that we're bringing is the wallet aspect and the decision made pegged to proposals, right? Now, we let the members or groups do whatever they want with it, because at the core of it, we're just enablers of the tech and not the decisions they make. So it's like a white label coming in with the wallet and rails for you to put money and move it. And the cool thing is, we want to be big on the features we add. Ideally is if you guys can come together and say, for the past 6 months, we've all contributed this much of money, and this is the proof and trail. Can you become investable? And then see each member that came with this group has earned more than actually lost. So saving pools coming together. There's a statement you mentioned last time on our call that I really liked. Is almost like what's the name? It's like stuck in the back of my head, but it's more like social enterprises having equity, so you can borrow against social community saving pools, and not like you treating them almost as entities. Rather, you see cooperative banking become a big thing in Africa. You see cooperative banks, especially in Kenya, some cooperative banks have huge market share, like competing with big banks. So, and this is people, like groups coming together, churches. Now, religious groups are really big in Africa. So churches coming together, entrepreneurs, network coming together, pulling money together. So if they have a platform that can do this, it's really about giving them the strongest feature, making it safe, making it, reliable, making it a place of proof, like a source of truth. Because one of the good examples, my mother, she's part of these groups, but she doesn't even know how much their group has. She uses them because every time she gets a loan, it's approved and the interest rate are low. She just has to pay every month. But if you ask her today, how much that your group has, she's like, I don't know. And quite frankly, she's like, I don't really care.
Right.
So you see the trust embedded already in these groups. I think it could be a new asset class that could bring more investment opportunities and bring that work down. So that's the work we're doing with Shikadao. And then from it, we got to meet the JUKUMU Hub and tested it with them. And we tested the UBI token with them. And it's been quite like, a learning curve for both of us. And from that, we bring like the technology, learning centers, like a hub for education and to utilize these tools, and then adding resources. So my friend David met Colleen just being a part of Karma DAO, and then found out what her work she does with Solar Foundation. It's like, hey, we are working with these groups with the UBI token. You want to like also help them in terms of like being more sustainable with energy practice. So we give away like 1,000 lanterns and pressure cookers, and then build a solar panel at the hub so they never have to worry about electricity. Now we're putting a broadband network so they'll be having internet at the hub 24/7. They already do right now. Another cool thing we're about to do by June is a learning center where people can come, and we're thinking of having 10 computers. So if you want to help us get more computers, please reach out. So ideally is create a center, people come learn and get certificates, get certified, and have soft skills they can use on a day-to-day basis. But then in that group, they use their technology to kind of pull together, save together, but also learn. Now learning tools that they can actually use. So even our technology and the tools we do, they come with embedded wallets that you can actually use to grow your income, not just a story like, hey, come in, deposit, learn, earn, cash out, see the cash in your hand. This incentivizes you to come back and tell a friend. And then the idea is build trust around your network. That's kind of like to touch points on all three. So JUKUMU Washikadao and Solar Foundation are pillars that work together in helping communities actualize, earnings in their community so they can individually have more income and as a group as well.
Right. Yeah. Thanks for covering all those things. I mean, it's a lot, but it's all super, super interesting work for me. I think, one of my interests in the crypto space has always been how do we kind of make more available these types of community oriented financial arrangements. And I think, at least in the context, like, I mean, it's where I've lived in the West and in Europe, in the US, where there unless except in like certain maybe immigrant communities, it's it's quite rare for anyone to be engaged in any sort of financial arrangement that's more community oriented. I mean, it's different in different countries, of course, but it's something that I think, given the kind of context that we're living in and the kind of trends that are ongoing in the West with the rise of kind of right-wing politics and the rise of like kind of increased inequality, I think there's something really interesting to look at in places where they maybe never even had these types of like institutional finance organizations around that could like, had very frictionless types of experiences that maybe people are kind of used to and like idolize in a certain way here, is that actually what is going to be increasingly more important to bridge the gap for a lot of people, I think, even if they are in the West, is going to be community-oriented financial arrangements. Things like saving circles, like Roskas, savings groups, like these are all things that I think are going to probably become potential solutions that people are going to want to look for, because or else right now, just the way that things are going and the way that things are regulated is that a lot of the money just gets extracted to the top. A lot of the wealth gets extracted to these big banks. And I think there's just going to be a certain breaking point where people are going to be looking for alternatives, more so than not just speculative crypto tokens, but actually like how do we protect each other and protect ourselves and our communities so that our wealth isn't just being extracted. So just saying that as like kind of contextualization. But what I find super interesting about the Solar Foundation project, just to comment on that, is that you guys combined saving circles that were already being practiced in the community with like the solar based appliances that you mentioned, like the pressure cookers and the lanterns, which I found super interesting. And that's in collaboration with Solar Foundation. How has that project been so far?
Us. Quite smooth actually, and love the work that Colleen and John are doing with Solar Foundation. They're very intuitive in like how they want it to happen, and I think they're also aware like, hey, these communities already do things. Let's empower them by not like changing what they do, but also just like building parallel with them. And I think that's quite huge, and it's been different from like experience of working with other organizations. I don't work with a lot of NGOs or organizations like that because I think everyone has, sometimes people have a narrative to sell more than actual like solutions. So whenever you see people active on solutions, I really tend to gravitate towards that kind of movement. If I come with my solution, that's I'm solving my problem. I did not like understand what do these people actually need. But if I was an enabler, like okay, where are the gaps? Can I put a bridge? Can I facilitate? Can I transition you, or can I help speed charge something like a catalyst? When we were in secondary school, we learned this thing called magnesium 4. It's a catalyst that speeds up the rate of a chemical reaction, but that it itself remains unchanged. And I think a lot of solutions we need right now should be catalysts, because you don't need to reinvent the wheel, but you need to either speed up or like slow it down. So you just become a catalyst that does something. So I think that's been the sweet spot with what we've done with Solar Foundation and JUKUMU and the Washikadao movement. And I think that's kind of like the parallelism I'm excited for, or in the long term, because it's quite dehumanizing thinking that these guys don't know what they're doing and they need better solutions. Because who told you that, right?
Yeah.
I could have, there's so many things I can change, but then is it really necessary to change this? Is it a problem, first of all? Like, do you need to change this? And I think this is one thing is quite too hard to grasp, especially if you're a builder, because you really want to build. You're like, oh, I see this, I want to change it, this needs to happen. You're passionate about innovation or change in communities. But then context is very important as well to understand, okay, why is it like this first? Why do people do this? Because then you might realize you are actually not solving a tech problem, but a culture problem. Sometimes people use certain tools not because they're better, but because that's what's comfortable in their culture to do. Like, I don't use M-Pesa. My biggest problem with mobile money is not fees. That's right. For a regular person, tell them, like I mentioned earlier, when we started, we were talking about, we thinking about it's the fee. People are paying so much. People would rather, why would you pay 14% or 16% on interest? The person who's doing this, at that point, they don't care about the interest. It's like, hey, I need cash right now. I don't care how much I get it for. I just know if I press this button, I'm gonna have 10,000 shillings. How I repay it, let me worry about that when I'm in that situation. So someone will find like a motorcycle rider will take a loan in the morning for 30K, gas up his bike, do some runs, start earning money. At the end of the day, repay it at a 14% interest. You're like, whoa, dude, you just lost 15%. It's like, yeah, I'd rather lose that than not work at all. When you solve that problem, you need to solve it from the initial decision you made in the morning to take that loan, not because why is the loan available at 14%?
Right.
Because then you realize it's already entrenched in convenience, because it's like, hey, if I press this button, money is gonna come. Now, coming back to the community saving groups, if we say like, okay, so that's your logic of reasoning, what if you could get that loan from your community, right? So you start pulling from that community, like, hey, this guy is part of our community. He does this particular business. He's going to work, and then the day he's going to pay us. So we have the social equity. And even if we default, most of these companies that when you borrow from them, they want you to pay at once. But like, dude, you have my wallet. You can just take 1,000 shillings every day and still keep me in your ecosystem, still make your money back, and my overdraft does not have to kill me every time I repay my money. So these type of innovations is what technology should solve, not reinvent access points. Yeah, that's just my two comments on that. In terms of like the synergy we should bring with innovation should match what's happening, and then from there new inventions will come. And I'm not saying that we shouldn't invent new things in the process, but then you realize amazing inventions come once the problem is really solid and clear. And there's never a lack of those in Africa or most places in the world, as we see.
Well, thank you so much, Victor, for coming on the show and sharing about the work that you guys are doing at NEDA Labs. I super appreciate it. And for the listeners, if they want, I highly recommend to check out the links and resources that I'll put in the show notes so you can learn more about what Victor is talking about, because there's a lot more that we could have gone into. We didn't have the time to, but yeah. Thanks so much, Victor.
Thank you, Joshua. Always a pleasure talking to you. I think you're building something quite incredible with Stacks and Bread and your podcast as well. And it's quite an honor to be a guest here. And yeah, looking forward to any collaborations we can do, and maybe get Stacks to be consumed in Tanzania as well. That would be something quite exciting to see if it rolled out here.
If you like what I'm doing here, consider supporting the show on Patreon. Your contributions help me keep doing this work and dive deeper into the politics of decentralized technologies. I promise you absolutely zero financial returns, no airdrops, and your investment may go to zero. But you will get good content. Check out patreon.com/theblockchainsocialist to support the show.